You may have seen the report recently that pending home sales dropped more than expected in the month of August. So, is that an indication that there could be trouble ahead in the housing market? Well, I'm going to break that all down for you, provide some context, and also tell you about what we are expecting to see in the months ahead and into 2022 in your real estate market update for September. Hi, this is Andrew with the Andrew Smith team at eXp Realty. And in the market report for September here, I want to take a look at those pending home sales that have gotten a lot of attention in the media over the last couple of weeks. And that's because after a red hot summer, pending home sales declined in the month of August. So it's created additional speculation. What does this mean? Is the air coming out of the real estate market? Is there trouble on the horizon? So with that in mind, I wanted to dive into that a little bit and put some context behind these numbers, some perspective so that we can kind of see not only what to expect in the months ahead, but what it actually means. So here's a look at the pending home sales as we were talking about. Okay, so the red arrow on the side of the graph here shows that from July to August, there was a drop off, or there has been a drop off in pending home sales. Now you can see if you go back, pending home sales were running extremely high when you look up in this area right here. Then they kind of dropped off. We saw a little bit more inventory come back and boom, it really dropped off again. So it's raised some questions, but remember, you can't sell what isn't on your shelves, right? So the biggest thing that we've been talking about over the past several months is the number one holdback, drawback on the real estate market right now is inventory. We've got a market that has been starving for inventory. It's why you've been seeing bidding wars. It's why you've been seeing multiple offers. So again, yes, we'll keep an eye on this, but if we look at this right here as compared to what's considered a historically healthy level, you'll see that even where we are currently, we're still substantially higher than the normal pending home sales that we've seen going all the way back to January of 2012. So no reason to sound the alarm bells here on this currently. As a matter of fact, Odetta Kushi, who's the deputy chief economist at First American, I quote her quite a bit as she does a lot of research into this and is able to put things into a good perspective. And she says, we are seeing some signs of a softening in the housing market, but context is important here. We're still very much in the seller's market, but we're seeing some early signs of a softening. Now, if you've happened to catch any of the videos I've put out over the past month, you'll know that I've been talking about signs of a market shift starting to appear. And I'll admit, that got a lot of people really excited. I should say a lot of potential buyers excited, suddenly seeming to think that there's going to be all kinds of deals available and that they're going to be able to make offers substantially below list price and get that offer accepted. That's not what we're talking about at all. What we're talking about here is we've had a market that's been scorching hot for most of the year. And right now, for the first time, it's like being outside on a hot summer day, right? And then in the afternoon, it's been completely still. A hint of a breeze picks up and it's like, I'm so hot, I'll take anything right now. It's a little bit like that. It doesn't mean that it's cool. Doesn't mean that you're ready to run inside and grab a coat. That's not what we're talking here. We're just talking about signs that the market is softening just a little bit. But again, how did we get here? What is going on overall? And as I mentioned, the biggest problem that we've had has been in the number of homes for sale. We've had a severe lack of inventory. This next slide shows that very, very well. So you've got white, blue, and gray lines here, which represent the new monthly listing accounts for the years 2017, 18, and 19. This is following a normal curve. So right here, this here, it's kind of a little bit like a bell curve. That's fairly traditional. You start to see listings pick up at the beginning of the year. They increase every month until we get to about May. Then they start to taper off and make their way down as you go through the year. But this orange line, here's 2020. As you can see, 2020 started just about what we would expect, in line with the previous years. Then the lockdowns from COVID hit, and what happened? Everything came to a screeching halt. The number of listings plummeted. They hit a low point initially in April before some of those initial restrictions started to get eased, and the people that really had to sell started to put their homes on the market, and inventory increased. But still, look at this gap. Right here at the low point, you're looking at about 275,000 monthly listings in April, when in a normal market, we're seeing about 525,000 new listings in the month of April. Again, these are national numbers, but this has never been made up. You can see as we went all the way out through 2020, the 2020 line of listing inventory never caught up, not at all. So what happened? The market kept getting starved further and further and further of inventory. We saw the results starting in February of this year. Multiple offers, bidding wars on prices that were just increasing substantially, seemingly without end. That is what we're starting to see change a little bit. Okay, so again, if we bring 2021 into this, here's where we are now. So you can see 2021 started way below where we have in any of the prior years. And although we were saying that the market was more inventory was coming to the market, I should say, again, we were outpacing 2020, but still way below 17, 18, and 19. So all of this gap that we saw in 2020 hasn't been made up in 2021. As a matter of fact, as you got from July moving into August, we've actually seen the number of listings start to drop off ever so slightly, not much at all. But that's not uncommon. That's not people pulling back. That's a seasonal thing that happens every year. Here in North Texas, what happens in August? School starts, youth sports starts, you've got football going on. It's not the most optimum time for a lot of people to suddenly say, now I'm going to put my home up for sale right as school starts. It just doesn't really happen. And so you're starting to see that seasonality comes in, and we're still short of inventory. Now, here in Frisco, we did see a slight decline in number of new listings in August. In Southern California, where I also operate in Temecula, we actually saw a total number of homes for sale increase slightly in August. But the Southern California market doesn't necessarily follow the same seasonality that we see here in North Texas. So where is this cooling that we've been talking about, or this shift? Again, it's slight. Here in North Texas, in Frisco in particular, if you go back to June and July, on average, homes were selling at 106 to 107% of list price. Okay, so what does that mean? Okay, so let's just use a number, $500,000. Let's say you had a home listed for $500,000. That means that on average, those homes were selling for $530,000 to $535,000, $30,000 to $35,000 above the list price. What we're starting to see now in August, we saw that come down all the way to 104%. So again, not a massive change. It's not bargain time, right? So instead of that home selling for $535,000, you're now starting to see it sell for $520,000. Still above list price, but not as much above list price as what we saw earlier in the summer. In Southern California and Temecula, we're seeing that hold steady right now at about 102% of list price. Okay, so it's still very competitive out there. There are still multiple offers. There are still bidding wars, not on every property, but again, on the ones that are in the absolute best condition. And that's true in any market. So inventory is still very tight. Going forward, we expect that this will continue to taper off and that you're going to see fewer bidding wars on fewer properties, with homes starting to come back to and maybe even start selling at list price in the next few months. But if you've been thinking about buying and you're sitting on the sideline saying, okay, I'm going to wait, prices will probably come down in 2022. Will they? Nobody knows for sure. There's a lot of speculation out there, but I can tell you, based on the information that we have right now, it doesn't look as though that's going to happen. And as a matter of fact, the most recent home price surveys for 2022 have just been released. And here's what they look like. The Mortgage Bankers Association is forecasting 8.4% price appreciation next year. Freddie Mac and Fannie Mae are just over 5%, while the National Association of Realtors is forecasting about 3% price appreciation. Average of all of those forecasts is right around 5.5%. Now, again, that's national. Here in Frisco, Texas, we've been running well above the national price appreciation for all year. Well, for the entire year, for the past year. Southern California, the same. Their price appreciation is above the national average as well. So here in Frisco, we've got a market that's being dominated by excessive growth, right? You've got a lot of corporate relocations going on. You've got a lot of people moving into the area. Demand is extremely high. And we don't see any signs of that changing in the near future. The only thing that's going to help our market locally is more inventory. And the builders are building flat out. They're starting to get more and more properties under construction, which is going to help ease the supply, which also means that and we're starting to see more resale homes come on the market, which will also help ease the supply that we've been seeing. So right now, if you've been thinking of selling, right, as more inventory comes on, that means less competition, right, for your home, which means that your pricing isn't going to be quite as high. So this fall could be the absolute perfect time for you to go ahead and make that move if it's something you've been thinking about. Hopefully this helps provide a little bit of context and kind of give an idea on to where it looks like things are heading for the end of this year and into 2022. If you have any specific questions that you'd like to talk through in more detail, please feel free to give me a call. You can reach me at 888-447-9650.